folks. This live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
Good morning.
Welcome in. We're back.
Yes, we are. Hope you guys are doing well. Hope you guys are doing better than me. I am still not feeling too well. I've had that RSV virus for the past few days, so I'm trying to kick that, but we'll still keep on keeping on here. Going over some great setups for you all today. Have my Christmas mugs that we pulled out. Gotta be festive. Oh,
yeah. Where's everybody from this morning? You guys know the drill. Drop it in the chat. We always love to hear where everybody's at.
Mm-hmm.
People from around the world. Love to see it.
I did not have my Saturday live session. That was when I was feeling my worst. I will have one this Saturday. I'm feeling a lot better. However, obviously my voice is still a little crackly, so just bear with me today. And then our last live session will be Saturday the 17th. So 2 Saturdays from now, we'll hold our last one for the year, and then we will be done until early January. Going to take some time off. Obviously, volume starts to diminish during the latter half of December, so don't need to really be worrying about trading at that time anyways. Good morning, Hugo, Paulo, Edson, Arnold, RJ, Scott. Good to have you guys on. Philippines, Sweden, Atlanta.
Know your names.
Mm-hmm.
Welcome in, guys. You guys have any channel for us to follow, y'all? Yeah, Nate will drop our YouTube channel in the chat.
Well, I mean, it's really just our name. Just you can type in Ariel Fx on YouTube, comes right up.
Yeah. Prince of Darkness, nice to see you. Yeah, I'm not at my place this morning, so there's actually some light on my face.
So you guys have the spelling for our name here, so you guys can go check out our free content on YouTube. It's a lot of good value. I'll just put in my website. It has the name and the title anyways. All right, South Africa.
No, it's Ariel Fx Tokor.
I don't know. I should change my name here to Ariel
my
Fx.
YouTube is what my name is here on the StreamYard. See, it's spelled right there, ArielFX.
Yeah, we upload about 2 times a month. So stay tuned for that. It's really great stuff. Let's see what else we have this morning before we get started. We'll start in like a couple minutes, guys, just to wait for people to trickle on in, and we'll get started with some analysis.
What's everybody looking at this morning? What are you in? What's your bias for USD or yen pairs or exotics, whatever you have, whatever you like to trade? We'd love to hear it.
Mm-hmm.
Try to make this as interactive as possible, even though we obviously can only utilize the comment section here, but still like to hear from you all. So Core, that we share the YouTube channel, bro. So Nathan doesn't have a separate one. We have the same YouTube, Ariel Fx.
Euro USD buys. Yep, I agree with that. AJ sells. Not too keen on that, to be quite honest with you. Higher time frame, we're in an uptrend. I don't want to fight the trend. NJ buys. Yeah, I could see that. See GCAD buys. Yep, I could see that. NZD USD for potential sells. Maybe sells short term, like very short term, but overall dollar still very weak. Scalp long, HF. Oh, you're getting risky there.
We got a lot of people looking at your exotics today, Mr. Jester.
That's right.
We do have CAD news, guys. Canadian dollar, monetary policy, 10 o'clock.
Mm-hmm.
And likely that will create, obviously, some volatility across the board. And we've been seeing a lot of Canadian dollar weakness, right? And so oftentimes when you have just the weakness we've seen in the CAD leading up to a news event, the news event is often the excuse to be that catalyst to push it in the opposite direction for retracement. So that would kind of be my expectation for today for the news event, would be to see some Canadian dollar strength finally come into the market. We'll see those higher time frame retracements.
Yep.
Doesn't mean to just go buy. Doesn't mean to just go, sell USD CAD, and which there is actually a pretty decent up close candle to play off of on USD CAD. We've been talking about for weeks. Doesn't mean to just sell USD CAD and buy every CAD XXX pair. I'm just saying that would just be the narrative that my expectation for the news event. We have a technical setup that works in that direction, and obviously that's what we play off of, not just what our bias is or what we feel like is going to happen.
Yep. I would say probably short 80 chef. I mean, higher time frame and lower time frame were in alignment with sells. USD CAD, I'm currently hedging. I'm in beautiful profit on my buys and looking to come into that area Aiden was talking about with sells. Let's see, EU longs and display. Yep, could definitely see that. Good afternoon, guys. Good morning, good evening, wherever you are. We'll wait one more minute and then we'll get started here. It's 8:09. We'll wait till 8:10. Possible Chef JPY buy to sell. Haven't really looked at Chef J this week. Haven't really seen much on it. I can check it out though.
Looking at the 1 hour up close, I know what you're looking at.
Yeah, so guys, if anyone who is new here, you know how we roll. We like to just kind of chill for the first 5-10 minutes, just kind of get to know you a little bit, see where you guys are from, what you guys are looking at. We'll get into some charts. We'll take some questions. It's a pretty chill session, but it's very valuable. I mean, those of you who have been on for the, however long, doesn't even matter how long, 1 week or 1 year we've been doing this, or not a year, but you guys already know how this works. Analysis, like what we talk about, plays out time and time again. It does not mean, however, to take it as signals, right? Signals don't work, okay? That's not going to make you a multimillionaire. What will make you a multimillionaire is learning the concepts, applying it, and practicing it over an extended period of time, right? People who are in it for handouts, those are the people who end up broke. I'm just being quite honest with you. So, but you guys know, if you're learning from this stuff, which a lot of you are, and I'm seeing your progress, which, congrats to all of you who've been sending, your charts into me. You guys are doing really well. And that's the most important thing, is to learn. But, needless to say, this stuff does play out time and time again. All right, we're going to go ahead and get started here. Bitcoin, no, I won't look at Bitcoin. Nothing but Forex, ladies and gentlemen.
That's all we trade. No indices, guys. No commodities. No crypto. None of that other stuff. All right. So, and again, if you guys have questions, drop them in the chat. We want this to be interactive. We want to help you guys out as much as we can. This is obviously a free session for you all. We don't have to do so. Why not take advantage of it and ask questions and be interactive?
Yep. Just a quick couple of reminders before I forget. So, like I said before, on the 17th of this month, that will be our last live session, and then we will be done for the year. We won't come back until, in terms of live sessions, probably, I don't know, depending on what I want to do, either the 11th of January or probably sometime in February. I'm just not quite sure. Might want to spend some time with my VIP members and work on providing them with some more content, which, by the way, if you guys are in VIP, we are coming out with a few new courses. It's not going to be new courses, just going to be additions to the original ones. But obviously, those of you who are already in our mentorship program, you get that for free as well. So very excited to be coming out with that. We'll probably end up doing a pretty big Christmas giveaway here on the 17th. So that last live session, we're going to do some sort of giveaway for you all. So stay tuned for that. Come prepared to learn, come prepared to pay attention, because it's not just going to be an easy question. I'm going to make you think, and the correct answer only. So, all right, we'll go ahead and get started here. I'll present my screen and we'll start sharing some charts.
Yeah, before we get started, and final announcement, guys, if you could, Nate, if you could drop in the chat our IG, guys, try to use this to kind of build out our IG. Really trying to build a network and reach as many people as possible with everything that we're providing. So please do give us a follow on IG. Nate's going to drop it in the chat. We'd love to hear from you on there as well, and interact with you on our posts. Post a lot of content, a lot of value on there. So be sure to check that out. Yeah, for sure. All right, let's go ahead and get into it. You guys, you can hear me, see me, everything's good. Yep, gotcha. Cool. All right, we're going to first start off by talking about Euro NZD. So the pairs I have highlighted in red are the ones I'm going over today. All the ones that I don't have highlighted are the ones I just quite frankly don't see current setups on, or don't see nice plays that I'm looking to possibly get in. Not to say that I don't have biases on them. I just don't see anything at the moment worth talking about. So I'd be more than happy at the end of this to take some questions about pairs that I don't have talked about here. Maybe we can kind of break it down to see what we could possibly look at in the future. But remember, guys, the stuff that I don't have highlighted, I just don't have anything for. So I'm not going to be, trying to tell you what to do in terms of those pairs, because there's no point of forcing setup. So let's first start off by talking about Euro NZD here. On the higher time frame, what can we see? We are definitely in a higher time frame bearish downtrend. It's just very easy. I could go to, my 8-year-old cousin and tell her, hey, where are we going, up or down? She'll tell me down, right? But still, some of you traders will still take longs, which I just quite frankly don't understand. We need to be trading with the trend. That's 100% the most important thing. Do not fight it. It will end up screwing you every single time. So if you recall from a few weeks ago, we took a few positions, right? So these finally hit take profit at the end of last week, right? So this area of supply, we swept equal highs, big, huge buy to sell. We had an additional lower time frame confirmation entry here. Ended up not hitting our secondary level, so we can go ahead and actually just delete that because that never happened. And then we ended up sweeping again after making a lower low, sweeping buy side liquidity, having that overall pullback, huge buy to sell, and made that lower low. And see, we can, within this counter trend, this is that last buying volume to sell off. And then we can see that higher high, higher low, failed to make the higher high with that push up. We can just see that consolidation there, those bullish candles, and then we fell, made the lower low. So that will turn into supply. We ended up making that lower low. We failed to push back up into it. And it's really just, we're basing everything off of institutional order flow and concepts, but we're just following the structure at the end of the day, right? As long as we follow the structure and can, find setups that have to do with, that particular direction based upon institutional concepts, then we're going to be, more highly profitable than other people trying to trade other strategies, because we know how the institutions move price. It's based upon volume and liquidity. So I'm actually not quite sure why I deleted the wrong one there. This should be that one. But anyways, so continuing, this entire move to the downside has not yet ended. I don't think we'll end until we at least hit 1.63. That is my overall objective here on this pair. If we scale out to a higher time frame, we still are higher time frame bullish, right? We have to understand that. High, low, low. We're looking for a higher high into even higher time frame supply. This is why it's so important to do multi-time frame analysis and do your top down, so you know exactly where you're at in terms of the structure, higher and lower time frame. So I think we can chug a little bit deeper into 1.63.
And, we can just see that, this is not going to be a low in the market, most likely, right? You really don't see lows or highs in the market with equal lows or equal highs. Normally, if you're going to reverse trend or break structure or whatever, you might want to, see something like that, right? You want to see a deep run of liquidity for the institutions to place their orders to then go long, right? So continuing off of the trend here, we have a few setups that we're interested in. We're currently in profit on 2 of them. Obviously, these 2 here have already hit take profit, one for a 1 to 5.25 and then 6, right? So this one right in here, we had an opportunity to sell off of the nearest supply level. So it is okay to have multiple positions in the market, right? And I'm going to be talking about this with a setup I have on Euro USD, because this is a beautiful example of what I mean. So I'll get into it when I talk about EU. But simply put, we have multiple levels of interest here. All right, we had that lower low, that lower high, and another lower low. So what do we naturally expect? A lower high, some sort of pullback. All right, so our nearest supply level within this counter trend, right, is this last buy to sell. Now, this is not a sponsored it in my opinion. It didn't sweep any liquidity. It's just an area of supply with imbalance on a lower time frame that we're looking to play off of. So we had the 1 hour time frame imbalance in here. That was our secondary entry, and our first entry was this last buy to sell volume. All right, so we had 2 entries here, and when we have multiple entries, we have to be able to split up our risk, right? Because since this is one particular move, we cannot be risking full risk on both of them, because if price just ends up pulling back deeper or goes long, then we're losing 1% and 1%. We don't want to do that. We want to risk half and half to make it an equal 1%. So looking for further downside here, I want the New Zealand dollar to strengthen to continue to do that, because I wanted to see NZD USD longs, AUD USD longs. But more importantly, I want to take out sell side liquidity and come into our overall objective here. So I guess you can say we're currently floating around break even on the first one. On the second one, we're probably up about a 1-to-1 or something like that at the moment. If we come a little bit higher, right, if we lose on this position, we lose half and half, so we'll lose 1%, and we'll look to come up into our last point of return here on this time frame structure. So when I say time frame, guys, I don't literally mean the 1 hour time frame structure. There's no such thing as the 1 hour time frame structure, the 2 hour, the 3 hour time frame. It's all just perspective. What I mean by 1 hour time frame is just a more zoomed in version. Obviously, you can probably classify the 4 hour as the higher time frame, daily as even more higher time frame, 15-minute more of a lower time frame. So we can see here that the 1 hour time frame structure looks like this: lower low, lower high, lower low. If we get a deeper retracement, this could be a lower high into a lower low again, still maintaining that structure. Obviously, what I mean by 4 hour structure would be probably this: higher high, higher low, higher high, higher low. That's just really what I mean. So going down to the 1 hour again, we are still technically bearish until we break this high, right? We would have to see not only a firm closure above it, but a sustained closure above it. So we can still pull up higher, right? We can still pull back. This would just be a lower time frame trend in here, right? For a more higher time frame pullback and a continuation short. So we could see that happen. We just look at the counter trend in here, right? So we have a high, we have a low, a high, a low, a high, a low. We failed to make a higher high, lower low formed. So that will flip to supply. Okay. So we have an opportunity to take a short from that level up in there if we, obviously come higher. If we don't, great, we're in profit. If not, we'll pull back up into that level. And again, if we win this trade, this will be, this will have to be at 0.5% again, because I do have more levels up here that I want to talk about. So this will be
a confidence in selling, because we have sell side liquidity. Sorry to interrupt, Dave, but
yeah, you're good.
This way, I just wanted to emphasize, we can have, very strong confidence in retracements and selling retracements, because that is not a low in the market, right? Oftentimes I'll ask myself, as price, let's say we're in a downtrend here, as price pushes higher, as it retraces, I ask myself, is that a bottom in the market? And quite clearly, just looking at that from a basic smart money perspective, understanding liquidity, that is not a low in the market, right? There is a ton of equal lows down there that ultimately will be the draw on liquidity. So that simple question, right, can make a big difference in your trading and whether or not, you can have confidence in selling retracements, and confidence in the fact that the trend is indeed not yet over, right? And we won't be shifting structure until at least those lows are run out, right? So just wanted to point that out.
Yep, that's absolutely correct. That's just more conviction for continued shorts. Now, this doesn't mean that just because we have all this confluence and all this conviction that price will continue to short it, that we need to over leverage. We have to maintain professionalism during our trading, and we have to be able to use proper risk management no matter what the situation is. Also, just because we have a level up here that we think we could run into doesn't mean we should just simply buy it. Okay, we have to treat each trade as its own. Right. So there is no setup for me to buy this right now. However, if price somehow goes like this, if we form like beautiful equal lows, sell to buy, and we go like this, right? And then we start to pull back and we have room to go to the upside. If we haven't filled this yet, then I may look to potentially hedge it with some buys, right? Equal lows would be run out. Maybe we come into a level of demand. We break counter trend structure to the upside. We're making this little small counter trend to the upside there. And then we pull back into a sponsor candle, and then we buy up into that level if the risk to reward is there in the first place. So it's not always, is the setup good? Let's just say this actually occurred, and the only spot that's really valid to buy it would be here, and we pull our risk to reward tool and understand that we have to place this out below the sponsor candle because that's the appropriate level, and then take profits, go right here. Well, that's only a 1-to-1. That doesn't meet my risk to reward rules. So in this case, beautiful setup, not a good risk to reward, so I can't place the trade. But then you may ask, well, if it's a beautiful setup, why wouldn't you just do it and get your 1%? There's no guarantee I win the trade, right? So why wouldn't I want the highest probable chance to make the most amount of money? If I only have a 1-to-1, that means I basically have to win 50% of my trades to just break even. And winning 50% of your trades, if you actually think about it from a professional standpoint, is very difficult to do. There have been a lot of interviews with hedge fund traders, a lot of interviews with professional stock and Forex traders, and they say if you can hit 50% win rate, you're sitting phenomenally well. Meaning, this doesn't mean that, or this means that, if you get into a trade like this, 50% win rate, meaning half of your trades hit overall take profit, not your TP1, not your TP2, not your closing early, not your moving stop to break even after like 2 pips. No, the entire trade hits take profit full, right? That's what we need to start calculating our win percentage on as well. Anyways, just want to throw that out there. So I'm looking to sell from that level if we come up higher. If not, this is still valid. If we come up into our original level in here, I would probably still say this is valid. We haven't come into our overall objective yet. We still have sell side liquidity. And I would probably treat this, if it does this, as more of a buy side liquidity run, right? We can't be too quick to say, oh, we've shifted structure. Oh, we've broken structure. We can't be too quick to judge that because we just have to have common sense here and say, we're still overall bearish. We haven't come into this level yet. Sure, we may have maybe even a closure above it, but we could easily pop back down into the range and then continue to short off again. That's something that could happen. We could come up into these 2 levels. So I am leaving these open. Okay. So just keep that in mind while you're trading. Use some common sense as well. Don't be too quick to judge it. Don't be too quick to have your emotions take control over you. Really think about what's going on here and make the proper judgment. All right. Continuing Euro USD. So I'm looking for continuations to the upside. I am currently in this long. I'm in this long from down in here. Had that wick entry last week. Talked about this many times. We can see that we swept buy or sell side liquidity, ascending liquidity, with a clean sell to buy. We kind of repriced there, repriced here, just forming different levels of demand. We had an initial reaction here. And we went long, we broke the structure, so stopped, moved to break even, and obviously we came back down, hit that break even. But we did take some partials, so we did make a little bit of money off that. But then I talked about this lower level in here that we actually hit again to the T. Guys, if we know where the liquidity is, if we know where the valid levels are, if we can understand order flow, if we can understand market direction, supply and demand, this is why we're able to get wick entries like this. This is not just coincidence. I'm picking tops and bottoms of the market all day long because I know where these institutions are getting in. So we just have to be able to identify that. And it just takes practice in doing so. And once you have the right practice and experience over time that it's required to take, it's not going to be as stressful when you're breaking down charts. It really isn't stressful at all for me. I open up a chart and I can, break it down with ease and understand, all the concepts and be able to apply it and know exactly where it's going. Obviously, nothing's 100% guaranteed, but we have the highest probable chance to make money with the setups that we have. So we can see here, shoulder, head, shoulder, kind of had the fake out, sell to buy. That's where we mitigated, where we got in, which created another sponsored candle. So that is a sponsored candle, in my opinion. Big sponsored move. We ended up making a higher high. So what do we naturally expect? A higher low. So this is what I wanted to talk about in terms of higher and lower time frame structure. I had a question about this the other day. Someone asked me if I was, actually, I probably won't say it because I don't want to reveal this person. But anyways, they were asking me why I was placing so many different entries. Well, it's because there is no telling whether we stop here, whether we stop here, whether we stop here, or whether we stop here. Who knows what the market's going to do, right? We could mitigate a lower time frame level of demand and continue long like we kind of are doing now. Or we have a deeper retracement, come lower into higher time frame levels, and then go long from there, right? So I'm just setting my orders at probable regions because I don't know which level it's going to react off of, but I know that's a demand on a lower time frame. I know this is the start of the sponsor move. I know this is an imbalance. I know this is lower time frame demand. So I'm setting my different orders at these different levels, right? Obviously, splitting up your risk. You do not want to be placing full risk at each and every one of these positions because this is one singular expansion, one singular pullback. If this pullback ends up breaking, well, now you're losing ×4 your risk, which is completely unnecessary. So you need to be splitting up that risk. If you have 4 entries, then you need to be placing 0.25% on each of them. 3 entries, obviously 1/3 of a percent, and so on and so forth. You guys can do the math. So really what this is, higher high, higher low, higher high. So what do we naturally expect? A higher low. Well, how do we know the pullback isn't going to be here and go long, or here and go long, or here and go long, or here and go long, here, whatever? We don't know how deep the pullback is going to be. So just because we may break the structure here doesn't mean we're bearish, right? It just means we're having a deeper pullback because we're overall bullish. So this is just a higher high and a higher low. This overall pullback is just a, or this bearish trend on a lower time frame. If we make another lower low here, right, is just an overall pullback on a higher time frame. That's essentially what it is. So that's how we can kind of determine the difference between actual breaks of structures and just continuations. This is not an actual, if this happens, this is not a break of structure. This is more of just, an overall pullback for the continuation because we're higher time frame bullish. We have to understand higher time frames as well. So lower time frames, on the other hand, lower time frame says this. We made a high, we made a low. We made a high, we created demand, made a low, pullback. Made a high, created more demand, created a low. We could have easily created a higher high, higher low, high, and just gone with that, with the lower time frame. And then maybe at some point it ends up breaking and we have the overall pullback, and then we go long again for this expansion, pullback, expansion move. Hopefully you guys understand what I'm trying to say there. So that's why I have multiple levels. I have the higher time frame levels that if we get into, if we have a deeper pullback, but if we don't and just have a shallower pullback, then we can take advantage of that. So, it's okay to be placing multiple levels. And at the same time, if I lose, let's just say it comes all the way back down into the last point of return here, right? The last one. If I'm doing 0.25% risk on each of them, total 1% in total, this is essentially 15%, right? A 1 to 14.7, let's just round it to 15. So 15%, 15 divided by 4. Let me just do that really fast. 15 divided by 4. And this is an appropriate take profit for this particular trade. You have to have appropriate take profits. You can't just set random take profits at the risk to reward that you want. That's just, you can't do that. You have to have appropriate take profits. So anyways, that would be 3.75% minus a quarter, and a quarter. That's 0.75% total, that would net 3% in the trade, right? That's still, the aggregate positions would still be in profit. That's why it's okay to lose trades. And I'm okay with that because if we're in a bullish uptrend, is there a higher probability that we go long or a higher probability that we go short? And that's just, I mean, even if you're brain dead, you can answer that question. The higher probable chance that you'll go long, right? Because you're in a bullish uptrend. So if that's the probability that we'll go long, then it's okay to assume this type of risk. It's okay to place your trades at multiple levels, knowing that no matter which level it hits, you're probably still going to be in net profit overall. But you're okay with taking longs because the probability of it actually going long versus going short is higher. But you obviously have to have valid entry points to begin with. If you don't, well, then there's no trade. You can't just buy it for the sake of buying it. Just because you're in an uptrend, you can't necessarily just buy it. You have to have valid entry points, stop loss points, and take profit points. All right, so that's Euro USD. I'm looking for these three levels if we have a deeper retracement. Currently, we are in profit on this one right here. GBP Swiss franc. So similar to Euro USD, we have multiple levels. This is just our lower time frame level. You can see we've made a higher high. This is just an overall pullback, higher low, higher high. So what do we expect? Some sort of higher low for a higher high again. We actually swept equal lows there. That wick took it out. And then we formed that crazy sell to buy, and we actually took out sell side liquidity in here. When we created that sell to buy, we kind of consolidated, and then we expanded to create that higher high. That will turn into demand. So before coming into that demand level, what do? Well, we build liquidity again, because institutions build liquidity in order to free it up so they can place their orders at those levels. Not only those orders, but also to mitigate other orders. So, and then they continue. So what else do we see here? Shoulder, head, shoulder, fake out, potential long. That's what we're looking for. So we're currently in this trade here, and in a higher time frame, we are looking at, if we do have a deeper retracement, maybe back down into this area of demand in here, that's sitting at 1.12745. And if we have a deep retracement, maybe back down into that last point of return here, that's sitting at 1.1137. This is where we failed to make a lower low here and made a higher high, and we shifted counter trend structure, right? The counter trend has been broken, and then we started with the bullish uptrend again, because we can still see higher time frame. Can still see higher time frame. We're bullish. High, low, looking for a higher high now. Right? That's how we can kind of determine lower and higher time frames. So that's G-Chef. GU, I called this one out as well. I had multiple levels. There was a lower time on the 15-minute time frame. I know I'm on the 1 hour, but on the 15, there was a level of demand in here that we played off of, because we swept equal lows, sell to buy, higher high. I thought maybe we just have a slight retracement and just continue like this with the lower time frame, right? It didn't do that. Instead, we had a deeper retracement into our secondary level. Unlike EU, in which we just came to our first and started to go long. We never had the retracement into our secondary, which is why it's okay to have multiple positions, guys. So I lost on this one. I had, again, 4 different levels of interest. I had one in here, one in here, one in here, and one in here. Lost 0.25%. Now I'm in profit on the second one. If it comes lower, if we continue with this counter trend downtrend, well, maybe we come into that third one into the real, well, I wouldn't say real, but more of a higher time frame sponsored move, because we can clearly see that's demand in a sponsored move. We can see the sell to buy, swept equal lows that came into our original level from last week, right? We called this level out too. Let's see. So yeah, we are still in this trade here. We're sitting in profit. We're aiming for 1.25 overall. So we actually had a trade in here that we won on 6.3%. We had another trade that we had a wick entry on again that I don't know what we're floating right now, but in profit on this one, and then we're in profit on this one here, lost on a lower time frame one in here. If we have a deeper retracement, 1.2030 would be my next level, and then 1.1964 would be my last level there. Okay, just following the structure until it breaks. NZD USD, same sort of deal. I had a lower time frame entry in here. We lost on that one. Stops were below the low. No worries. I don't care at all. If it comes down into our overall demand level and lower time frame demand in there, then great. higher high, higher low, higher high. I want a deeper retracement for a higher low, for a higher high. I just want to get back down into that discount, into where our last, selling volume is, just in there. We can see that we're building sell side liquidity. 1, 2, 3, 4, 5, 6, 7, 8, 9, like 9 touches of that trend line. I can probably assume we're going to have maybe some sort of sell to buy. I would hope for that. So that's what we're looking for, 0.6250 on that one. USD CAD. So with USD CAD, we're hedging a lot of our positions here because, and this is what I mean by multi-time frame analysis. Lower time frame, we're bullish. Okay. Higher time frame, we're bearish. Higher time frame, we're bullish again. Okay. So we have different directions we're going on the different time frames. So overall, higher time frame, we're still bullish. I expect further upside. But right now, this is a lower low. This is a lower high. This is a lower low. Until we break this high, we're still bearish. This is technically still a lower high for a potential lower low. So you have to follow this structure as well. And in following that structure here, we're also in alignment with potentially this structure in here for potential longs. And we haven't come into objective there, 1.321. This is that last selling volume before the huge expansion to the upside. Again, we have relatively equal lows in here. So potentially we could come lower into 1.321. Okay. But on the lower time frame, we were forming higher highs, higher lows. We did have a sell opportunity in here. There's a lower time frame supply. So I had one in here and one in here. This is still within this one expansion. So had 2 of them, had a great entry there. But I looked to hedge my positions because we were still technically bullish. In higher time frame, we're bullish as well. So I'm like, well, it's probably best that we do hedge. However, if we hedge, it doesn't matter. We still have to find a setup for it. And I don't mean find one just like, oh, let's just sit here and just try to pick one out and trade it. No, you have to have confluence for the setup, guys. You have to, or else you just can't take a trade. If there's no confluence for a buy, I wouldn't buy it. I wouldn't hedge it. Right. So we're in profit here. We actually formed like some sort of head and shoulders, like fake out here, and stops were already at break even. So I was good. So when I came back up, I made some money with taking partials, but hit break even. But that's okay because we're in buys from down in here as well. So the reason for that is because, well, one, we're still bullish lower time frame, but also with this counter trend, lower low, lower high, lower low, lower high. We failed to make a lower low, higher high. That was supply that we reacted off of. We failed to generate the lower low, and instead we made the higher high. So that will flip to demand. Okay. So we came into that nicely and then blasted off there. So we're in phenomenal profit on the hedge buys. We broke even on the hedge shorts. I also took a position here. I actually took 2. So last week, this was my first position. When we were up here, we were in shorts, obviously. We had this demand and then this demand. So I took 2 positions. Stops below here, stops below here. Lost this one. We're winning this one. Okay, so that's good there. Shorts from here, we're in profit. And then we pulled back, lower low again. So I sold in here. We were in good profit, but then we ended up pushing back up. So lost that one. So lost 2 of them at half risk, broke even on this one here. And now we're in a really good profit on the buys. Still, overall, the aggregate positions are in really good profit right now. However, I'm looking to possibly sell it because we're still technically bearish. So still hedging my positions. So I'm holding these buys. Stops are at break even now because we made a higher high. Partials have been taken. And we can see on a lower time frame, it looks prettier, but this is our last point of supply here with this time frame. If we come higher than this high here, if we close above it, we're probably going to continue with the bullish structure. So until that, that's still valid for shorts, placing half risk there. If we do it, great. If not, then we continue long. Either way, still, aggregate positions would probably still be in profit at that point. Okay, so that's USD CAD. USD Swiss franc. I don't really have much for this one. We're still overall in a downtrend. What I'm noticing here is, simply just the previous supply level. It's really all the confluence I have. I mean, we have relatively equal highs here. We could have some sort of big buy to sell, have that excuse to push price up into that buy side liquidity here to mitigate and come into this area of supply. Lower low, lower high, lower low. So what do we expect? Probably some sort of lower high for a lower low, right? So that's just all I have on USD Swiss franc. NZD Swiss franc, we are in profit here. So I did, let's see, where was it? I think there was an area, it was somewhere in here because we had the clear sell to buy with that wick that swept these equal lows. I had a buy opportunity in there. So that was that lower time frame. I thought that, okay, on the very lower time frame, yeah, it was right here. Let me actually make it pretty. I thought that we may continue on the lower time frame. That's always a possibility. Clear sell to buy, higher high. So demand in there. We came into it. We were in profit. And then we came back down, hit the stop. So I thought, maybe we could just continue. Right? We'll just continue with the lower time frame structure and continue to trade that until it breaks, right? If we have a deeper retracement, then great. We have higher time frame levels to come into. So I lost a position here. But I'm in profit on my secondary one, which is this level of demand, right? You swap all this sell side in here. So we're in profit there. If we come lower, then I have my overall higher time frame demand level down in here. We are actually, we already took profit on this one, took a trade from that demand level here, 3.5%, and then higher high. This was the mitigation of this huge sell to buy. You can just clearly see that wick sell to buy that swept liquidity into that demand. We came into that perfectly, pretty much to the T, and then made another 3.33% there. So when we broke this counter trend, it created this repricing, the failure to generate the lower low, and then the higher high formed. We never mitigated. So that's still valid. 5,890 psychological level. So in profit on this one, if we come lower, we have these two. And we can see the risk to rewards on these are definitely high enough to take care of any losses we incur. And obviously, we're in a higher time frame uptrend. I just zoom out. Higher time frame uptrend, so the probability of us going long is higher than it going short. Just got to, and it comes down to common sense as well, guys. I mean, if we can just use our brain, it's not that difficult. So continuing here, AED CAD. We were originally looking for higher time frame pullbacks into our demand levels and imbalances, but we're just maintaining bullish structure on the lower time frame here. We're just continuing like this, right? If it has an overall retracement, then great. If we can get back down into these regions, I'll definitely look for longs, right? Because we're making higher highs, higher lows. Currently, we're just following the lower time frames now, looking for opportunities until we break. So in here, we swept equal lows, sell to buy, kind of repriced there and there. So I had two levels, only the first one hit, and that's okay. Took sell side liquidity, had a wick entry, and then just missed our take profit. I'm actually still in this trade here for a 1 to 4.15. So that should go and run. We have equal highs, so I'm very confident in this trade. However, partials have been taken because we made a higher high, because this is a higher high, higher low. Once that higher high was broken, that was my first take profit. Partials were taken, stops to break even. We did have another opportunity, though. Remember, lower low, lower high, lower low. We had that entry, pull back, failed to make the lower low again, and instead we made the higher high. So this area of demand, we flipped from supply in there, reacted, failed to make a lower low, and then we pushed up, made that higher high. So that flipped from supply to demand in here. Okay, so we had that beautiful, again, wick entry. In this case, stops had to have gone below that overall low. You could have placed it below here, but technically this low created this high. So this is still the range. Price could have had a deeper retracement, maybe into something in here for continuations. So still, risk to reward was met for almost 4.5%. So just riding this one out. When I do clear these highs, I probably will take a little bit off the table in terms of partials. So that's AUD CAD. I'm going to go into AUD Chef in a second, but Euro Chef just wanted to give you an update with, we are just currently floating in profit here from our original trade from a couple weeks ago. This was before Thanksgiving, so I think it was, 2 almost 2.5 weeks ago. From this area of demand, higher time frame, we're bullish. We're just continuing to form higher highs, higher lows. High, low, came into prior demand. Great. Had the reaction, broke the counter trend structure. Obviously, we can see that. And I'm not going in depth on this, guys, because I just don't have the time to do so. But just kind of going over surface level stuff here. Breaking counter trend structure. We can see that on a lower time frame, that's a clear sell to buy that swept lower time frame equal lows that came into a 1 minute demand. So that will turn this into demand here, which is why we had that reaction to go long. So had that beautiful reaction, and it's just slowly making its way up. So we're making higher highs, higher lows. I do think that, this is a higher high, a higher low. I do think that we'll end up making a higher high at some point. So what we saw on a lower time frame, well, there was this level of demand in here, formed a higher high, swept sell side liquidity, pulled back, and now we're looking to make a higher high again. So we mitigated that demand level over to the left, and then created that sell to buy that swept sell side liquidity there. So potential pullbacks, into the 30-minute, it looks more pretty. Pullbacks into maybe that level to go long. Counter trend has been broken, looking for possible pullbacks. That's always an opportunity there. All right, AUD Chef. excuse me, last one. So with AUD Swiss franc, we have been looking to sell this plenty of times, right? We've broken even on a lot of them. We took a couple losses in here because we never got down to our take profit one. And there's just a lot of trades. Anyways, we're higher time frame bearish, as we can see. Low, high, low, high, low. This is the structure, right? We have not closed above the previous swing point. All of this is just one big overall pullback. We're still looking for a lower low. It's still bearish structure, right? So on the 2-hour time frame, you can just see it better here, right? You can see that sponsored move, buy to sell into a level of supply. Made the lower low. Pulled back, we mitigated, we got in. That was our first position. We had tons of positions in here. I didn't think that price was going to consolidate. We ended up consolidating. We had no idea. No one had any idea. No one can predict that. So we just consolidated. I put stops to break even because I didn't know what price was going to do at that point. And then a lot of break even occurred when we had this huge run up. But we scale into a lower time frame within this distribution that occurred, right? Distribution schematic. And this is where we broke structure. This is our last buying volume that failed to generate a higher high, right? In comparison to this high. And we broke structure and made the lower low. So this is our last point of supply, higher time frame. Okay. So simply put, we generated equal highs, or all this buy side liquidity in here, just to run it, to come up deeper into our last point of return, fill all this imbalance in here. You can just see straight sell side imbalance and come up deeper into a lower time frame supply in there. Mitigated that perfectly, kind of distributed on a lower time frame if we just kind of scale into it. So when we came up into that level, not only did we sweep all that liquidity to the left and mitigated our last point of return, but we kind of started to distribute here on a lower time frame, and then we just started to roll over to the downside. Okay, so if we zoom back out, happened to be on the 30-minute, right? Came into it, distributed, broke structure, lower time frame. That was that 30-minute last up close candle. It wasn't a sponsored candle, but it's more of like a supply level. We broke structure, made the lower low, right? High, lower low. Pulled back up into that level. Talked about that last week. Got that beautiful entry, and then we fell to the downside. So we're still holding this position. We're currently floating. Let's see, 37 pips. The reason why I don't want to move this risk to reward is because anytime that I do that and then push it back down into this level to where it should be, and I go to another pair, then I come back to it, the risk to reward tool is now back up here. I don't know why it does that. I don't know why it glitches, but I'm just going to calculate it with math. 37, what are we currently at? 110. So that's what? Maybe 1 to 3 right now, something like that. But anyways, so we've created this low, this high, and this low again. We can see that when we had this huge buy to sell, we sort of repriced here, kind of created that supply and fell down again, making another lower low. We pulled back, but failed to come up into it, right? We never mitigated that supply. So I think that if price has an overall retracement up into this level, I think this is still valid. It would sweep all this buy side liquidity here, run the liquidity, come up into supply, and then fall. If it doesn't, whatever, we're still in the sell and it can continue to trickle and make me money all day long. I don't care. But if we do get a pullback up into that level, I will be looking for shorts. The stops would have to go above this high. Why? Because this high did not create this low. This high did. This is the high that created the overall lower low. So this is technically one expansion, right? Remember, just as this is one expansion, right? Just because this high ended up generating this low doesn't mean that if there was a sell opportunity in here, there's not. I'm just saying if there was, stops couldn't go above that high. It would have to go above the overall high. Same thing within here. That's supply level. Can't just go above the supply level candle. Needs to go above the overall high because this is the high that generated that low. Same thing here. This is the overall pullback. This is the high that generated this low. So stops would need to go above that high instead of above that high. Now you can place it above that high if you want a better risk to reward, but then you run the risk of it running it and then going short. And if you had to just place it above the high, you would still be making money. I'm just a more conservative trader. So I don't like all the psychological stress of it all. So that's just what I do. But still, this is still a 1 to 6.8. I'm still happy with the risk to reward. So it meets my rules. So that's what I'm looking for. I think that's 0.63524. Just trying to be precise there. All right, so that's pretty much all I have in terms of my setups. I don't know if Aiden had anything of his that he wanted to discuss.
Yeah, I think someone mentioned Swiss franc, Japanese yen. That is one that I'm eyeing at the moment. So just quickly share, and then we can open it up for questions. We've pretty much covered the bulk of it. I'm going to hop over to Swiss franc, Japanese yen. Obviously, this one is currently still in a lower time frame downtrend, right? Making lower highs and lower lows. And if you hop out to kind of the 4-hour time frame, you can see that. Now, overall on these yen pairs, I am still bullish, right, from a higher time frame perspective. Right? I mean, you just simply have to zoom out. It's all you have to do to notice the fact that we are indeed still higher time frame in this kind of massive uptrend here, really across the board on the yen pairs, right? But we are in a bit of a retracement phase. And if you think about it from the higher time frame perspective, right, this is technically that higher low. Nate was just kind of talking about this concept. This is that higher low that produced the higher high on the higher time frames. Therefore, we have a bullish trading range from here to here, right? And so just because we're bearish here on this time frame doesn't mean overall we're bearish. Just means that we're creating a bearish counter trend, trading down into discount on the higher time frame, whereby we will then be looking for continuations with the overall higher time frame trend, right? So obviously we can continue to trade with this lower time frame, either one until it breaks right back up to the upside, in which point the lower time frames would then be in alignment with the higher time frames, right? Or right, we wait until we get into kind of higher time frame level of interest, level of discount, which for me is below these relative equal lows here. You can see it more clearly on the lower time frames. We do have a clean pool of sell side liquidity resting below there. And obviously this is our true level of demand where we had that manipulation, right? We had the short-term low, which was run out, sell to buy before the next expansion, creating the higher high on the higher time frames, right? So yes, it's certainly a viable, potential opportunity here on the lower time frames for a continuation with the lower time frame trend. Obviously, the up close candle here with the nice engulfing, right? Inefficiency created, new lower low. And we're starting to kind of stall out on the lower timeframes here. So hopefully seeing that type of sell to buy to sell that we love to see, right? You engineer the initial liquidity, you sell, you get the people in prematurely to buy, mitigate, while simultaneously running lower time frame liquidity, trading into the up close candle. And then you have the ultimate engulfing, whereby we can look for continuations or pullbacks on the lower time frame for that continuation lower. So, yep, I definitely see what you're looking at here on Chef J with this 1 hour up close. It would be kind of that last point of return, right, where we have that corrective move, corrective retracement into our last point of supply here, up close candle, mitigation, continuation. So that's one to be on the lookout for. 146.4. 146.4 would be that area of interest, and then looking to obviously take out this low here, probably trade into the negative 27 if you want to fib this thing. 141.8. 141.8, a nice institutional whole number that I would be looking at in terms of targets. But yeah, that's pretty much all I had in addition to what you covered, Nate. So we can certainly open it up for some questions now.
All right, let's see what we have. All right.
If you see distribution, could that sometimes be considered a low? Well, you typically don't want to see distribution at a low, right? You would want to see accumulation. I think it's probably tying back to that when I interjected and I interrupted Nate and was talking about, that simple concept of asking yourself the question, is this a low in the market, right? Let's say we're creating lower highs and lower lows. We start retracing from a lower high, and you simply ask yourself that question, is this a low in the market, right? And so oftentimes, if there is, obviously equal lows or a very clear pool of liquidity, or just simply the fact that we didn't kind of stall out and accumulate and have some type of manipulative sell to buy, right, around that low, then oftentimes, that the answer to that question is no, that's not a low in the market, right? With lows in the market, yes, we want to see price stall out, really try to, kind of consolidate, engineer that liquidity. And obviously it needs to kind of be in an area of higher time frame interest, right? A point of interest where price logically could reverse from, right? So whether that be a higher time frame sponsor candle, higher time frame inefficiency that we're then consolidating, right, and accumulating at, and then we have that lower time frame kind of manipulative sell to buy, then the answer to that question might be yes, right? Maybe this is a low in the market, where we'll then be looking for the subsequent break of structure back to the upside on that lower time frame. So yeah, I mean that's critical in understanding whether or not a higher low is forming. Is, are we accumulating? Do we have that type of manipulation, right? And the kind of sell to buy, or vice versa, for an uptrend, do we have that kind of buy to sell, particularly into that higher time frame level of interest of sponsor candle or inefficiency, that might better answer that question. Okay, maybe this is a low, or maybe this is a high in the market. Hopefully that answers your question. If not, if it just kind of creates a high, right? Let's say in an uptrend, it just creates a high and then starts pushing lower. We don't really have any type of manipulation, right, or consolidation or distribution. Then oftentimes that retracement, that gives us confidence to go ahead and buy that retracement back up, taking out that high again.
Mm-hmm. Yep, that's right. How do you confirm entries? That is a very, what's the word for it? Like, broad question. It's not something that I can really describe to you. I mean, that's something that we go into within our course material. Talking about it here, I can give you just a very, very basic understanding. So essentially, how, from the most basic level ever, and this isn't going to help you considerably, But let's just say you're forming some sort of counter trend, maybe some sort of distribution or whatever on a lower time frame after you've already come up into your level of interest to begin with, and you break structure on a lower time frame. Then you can kind of consider yourself confirmed in the sense that you can pull back to continue short. Because really you want to see, a slowdown in price. You want to see price react from your initial level, and then maybe price push away from it, potentially even break structure on a lower time frame, because then that will give you a sense that, okay, well, price is reacting from this level. This is a valid level. Now I can look to maybe pull back and short it again or something like that. But that's just a very broad explanation. There's so much more detail that I can get into that would take hours to explain. That's just all through my courses. What's your reference point to confirm supply and demand? Again, that's very broad. That would go in my supply and demand course. So I don't want to spend the time to really answer that. Do I only do supply and demand? Absolutely not. I talk about institutional concepts all the time. Can I go through the dollar index? I can go through the dollar index. However, I will tell you that you don't need to look at it. All right. So this does not make any difference. Right. I mean, I look at it on occasion to kind of see, okay, where are we at in terms of maybe higher time frame levels on the dollar or whatever, just the overall direction possibly for the week. But in order to be successful with the pairs that you're trading, you need to understand the pairs, right? US dollar is not going to tell you where to get in on Euro USD. Euro USD is going to tell you where to get in on Euro USD, right? So you have to understand the pair in which you're looking at. The pair that you're looking at is going to tell you where to get in. Base everything off of the pair that you're trading and not some other thing that may be correlated that could tell you where to get in. It's not going to. It could give you maybe a general overview or outlook potentially, but if you're looking to trade EU and you find a setup on it, you don't need to go to the dollar index. Just place your order on Euro USD. That's what's going to be telling you what to do. But overall, I mean, we're still higher time frame bullish. We still are. However, I wouldn't be surprised if we had some sort of deeper retracement. We're sitting at our last point of demand right now. Right, this is the low that generated this high. So we're just having a deeper retracement. I'm not sure what price is going to do because higher time frame we're bullish, lower time frame we're bearish. So I'm just going to continue to trade with the lower time frames until it breaks. Right, that will provide me with setups for all the XXX USD pairs going long. Right, we're currently in longs on EU. Right, there's nothing stopping EU from going long right now. I don't really see anything. Yes, we are overall bearish. However, we came into a higher time frame level on EU. AU, we came into a higher time frame demand. GU, we swept all-time lows. So we could be in for a huge push up and a reversal on the dollar potentially. I don't know. But I'm just going to continue to trade with what I see on these lower time frames until structure breaks. And if structure breaks, then maybe we'll shift our bias. But in terms of right now, I'm just still trading with the overall structure of the market and the lower time frame. Once we shift, then I can kind of zoom out to see what the higher time frame is looking like and maybe higher time frame levels we may have come into that cause the reaction long if we do go long, and then we'll go from there. As of right now, I'm still seeing dollar as bearish at this current time. What specific whole numbers constitute as psychological levels? Just round numbers. Like for EU, right? 1.08, 1.07, 1.06, 1.0950, 1.1250. I mean, just round figures. Those are psychological levels. That doesn't mean that there are specific whole numbers that will react better than others. Psychological levels just meaning like traders are more apt to get in at those levels. Price is attracted to whole round figures because, when institutions are creating the market for, companies. Let's just say Coca-Cola in Japan, right, sells $10 million worth of Coke in yens, right? So they make all that yen. Well, they transfer it back over to USD. Well, in order to do that, they have to be able to take all of those yens and transfer all that large sum of money into US dollars. They have to be able to do that when the most liquidity is available, right? So in order to do that, the most liquidity is available at these round figures, which is why you see reactions from these round numbers, psychological levels, essentially. Let's see. Where do I think EuroCAD will retrace? I have no idea. I have no clue. I trade what I see, not what I want to see, right? That's my whole kind of motto, right? I don't like try to pick a price and expect, price to retrace from that level. If it starts retracing from a certain level and forms a setup for me to trade it, then great. I have no idea. Price is extremely bullish on EuroCAD. We should not be looking to sell EuroCAD if that's what you're hinting at whatsoever. CAD is extremely bearish. XXX CAD is definitely going long. However, that does not mean to just buy it. You need to be finding setups for that. Let's see. I mean, guys, yeah, I see a lot of questions here. I mean, if you guys are interested in, really learning how this works, in all honesty, there's no point of, trying to make it work on your own or hoping and praying that if I just spend a little more time, then it'll just come to me. You have to be able to learn the right concepts and be able to practice the right way and be guided by the right people. And if that's something that you want to do, because all the people who are very serious about trading, those are the people who are going to make money. People who are doing it as a side hustle, people doing it just for fun. I mean, you're just only going to lose money. And that's just a guarantee of the market. So, if that's something that you really want to do, be able to do this as a career, as a profession, do this full time, get funded and learn the skills properly. If you're interested in what we have and you like the way we break down charts, just head over to our website, arielfxtrading.com. I'll even type it in here again and just book a free call with me. Well, let's just have a chat. If it's the right fit for you, great. If not, then at least and you don't have to spend money on something that, isn't the right fit for you. We're not here to take your money. We're here to help you and make sure it's the right fit for you before you end up, making the move to join. So just want to make sure that it's not only the right fit for you, but also you're the right fit for us as well. We do have specific criteria for our mentees. We have to make sure, you have the right mindset and everything, because if you do, well, then it's going to be a lot easier to work with you and take you to hit your overall goals. Can you go over a trade that you took that includes a miss at reference point? You mean just a trade that I lost? I'm not sure what you mean. Hey guys, just for future reference, guys, when you ask questions, just try to make it as clear as possible what you mean. Give as much detail. Sometimes I just have no idea what you guys are talking about. Come on, guys. What other questions you guys have for me? I know there's something. Any other pairs you guys are looking at?
We got a couple.
This is your time here. I am about to be hit by FOMO. Please look at your NZD. It just hit the entry and I am tempted. Oh, there's your answer. If you're about to be hit by FOMO, well, then you already know what to do. Psychology is absolutely huge. It's why traders lose, to be quite honest. 80% of trading comes down to psychology. 20% is just learning the strategy at the end of the day.
Exactly. And that's exactly why I wanted to do psychology course, which we launched just a little over a month ago. Obviously that was added in for free to existing private group members. But that is part of our core structure here that at least I and Nate try to emphasize very much is trading psychology, and it's so important and literally determines your results, yet it's so little talked about. Right? We kind of want to put a stop to that and make sure everybody in our group has the right mindset, knows how to react and adapt to different psychological burdens, right? Different emotions that you're invariably going to have to put up with throughout your trading journey and throughout different market phases. So if you want to be a part of that, just shoot us a message. Head over to our website, just book a call, free call. You'll even get a copy of our trading plan. So,
Yep, for sure. Can I check EJ? Let me take a look at it. Stop its counter trend. So let's take a look. EJ, are we bullish or bearish? We're bullish, right? Making higher highs, higher lows. So what do we have in here? Sell side liquidity. We've created equal lows. When a price starts to retrace, you look at left. Did it actually take liquidity or did it come into an equal low? If it takes equal lows, we're probably going to come lower, right? So we haven't broken the counter trend yet. I would need to see a clear break, not just a candle closure, because we could have the next candle push right back down into the range. It would just be a buy to sell. Right? We have to just use common sense and just be like, okay, when is structure actually going to be shifted? If price is all the way up here, yeah, structure has been shifted. If you see like a 1 minute candle push up there, no, that's nothing. Right? we have to just use common sense with it. So until we break
the lower time frame, Nate, we have some pretty clean descending liquidity there on Euro JPY, which I wouldn't be surprised to see a very sharp buy to sell there, snap back down into the range as you were just referencing. Yeah, exactly. So I wouldn't necessarily want to play off that candle right now, right? It didn't run any liquidity, right? The one right to the left.
Yep.
So yeah, potentially a buy to sell here, right? Looking for that manipulation. Maybe we then spill over into our higher time frame level of demand where we're looking to buy it.
Yep. You can classify that as liquidity right there. 1, 2, 3 touches. Just got to be careful when you're trading in here. When that occurs, maybe you get some sort of fill, you sweep liquidity, buy to sell, clear move, then maybe you can take it short. Who knows? If you're looking to buy it, well, I wouldn't look to buy it yet because, to be quite honest, we're not above the counter trend yet. And 2, we have deeper levels down in here that we could push into to not only mitigate these demands, but sweep sell side liquidity in here. So I have 2 levels of interest. I'm just sort of sitting on my hands right now. I'm not forcing anything in here because there's, quite frankly, nothing. Just sort of waiting at the moment. So yeah, hopefully that helps you answer that question. Market structure shift at a supplier demand zone that you gave an example entry. So just like do you mean like a supplier demand reaction? I'm thinking that's what you mean. What is liquidity? I would just take a look at our website, or excuse me, our YouTube channel. Just look. That can be answered just by watching some YouTube videos. Essentially, liquidity is a buildup of orders, usually in the form of, potentially, for example, retail buy or sells. Retail is taught to sell at resistance, buy at support. When price is coming up to a resistance level and continues to not break that level, there's a lot of orders around those levels. So naturally they place their stops above, the resistance that creates liquidity for the institution to go run. Market and limit orders. That's a very, very basic question. Market order is, buying or selling at the current price. Limit orders are buying or selling at specified prices of interest. You have persons in your community that are already consistent in profits and coming from another school, another mentorship, and have they evolved with new insights from you? I mean, I'm sure they have. I mean, a lot of people are consistently profitable in our group. I'm not sure if they've come from other groups. I mean, I'm sure they have, and they're doing quite well. I don't really know the best way to answer that question. I'm sure they have evolved. I mean, that's probably the reason why they joined, is to get insight into, the depths of smart money. What do you think about letting price enter one of your zones and placing a buy stop or sell stop after price passes the entry point, rather than leaving a limit at entry? Well, I'm only doing sell limits and buy limits, so placing buy stops and sell stops would be trading in the opposite direction of my trade. I guess I'm just a little confused. Think about it, guys. If I'm looking to place an order here, this is a buy limit order, right? If I place a sell stop, I'm selling here. I want to be buying. You can't place a buy stop here. Buy stops are placed above price. Buy limits are what places below.
I think they're probably saying wait until it trades through the entry and then place it like a buy stop or something.
Okay, if that's the question, then absolutely not, because if this level is already valid, then it's going to go long from that level anyways. So this is just why it's so crucial to have the understanding of smart money, right? Because if you're needing to wait for a reaction from this level and then placing a buy stop to confirm it, then you don't already know that this is an actual level of demand in the first place. So this is why institutional trading is so great, is because you can already know that these are levels of demands in the first place. And if they're not, well, then you end up losing the trade anyways. Now, I wouldn't place buy stops. I mean, because everything is going to be different. The price could go like this. Where do you place your buy stop? You can't place it 10 pips above, 20 pips above. That doesn't mean anything. You have to wait for certain confluences, within this specified region of price to tell you, okay, where is order flow actually going? Are there certain confluences that can show and prove that we're actually going to shift structure? And if you get those confluences and confirmations, then you can be placing your lower time frame entries for better risk to rewards, and you have a higher probable chance that it will go long. So no, to answer your question, I would not do that. I would not place any sort of buy or sell stops. Yeah. Okay, cool. That answered your question. Awesome. Perfect. All right, guys, I do apologize. I'm very sick. I don't really feel well. So sorry if I'm, coming across as, monotone or boring. Trying to do the best I can here, but if you have any other questions, just message us. We're going to hop off here today. Hopefully you guys enjoyed it, took some value from it. If you're interested more about, our program and how we can best assist you, head over to our website, arielfxtrading.com. Just book a free call. We'd love to speak with you about how we can best help you and create, a personalized plan specific to your needs. That's kind of how we're different. We are, people who really care about your growth and want to see it. And joining our program is, assurance that we're not going to stop working with you until you actually hit those goals. So, yeah, have a great rest of your day, and then we'll talk to you all on Saturday for our next live session.
Thanks, everyone. Cheers.
Take care, guys.